A very important weekly close happened on Friday. You can see here we actually closed the weekly candle below this line right here, which is the one that goes down to 2020 lows and connects here to the June 17th low that we had. And that is very important that we're now below it, because before we had stayed above and consolidated, which showed a relatively neutral emphasis. And I say neutral because we still were below this downward trend line up here. This is the one that started all the way at all-time highs, was resistance throughout the entirety of 2022 and this entire bear market that we've had this year so far. So the fact that we're still below this showed that it was relatively neutral in between, but we would have confirmation if the downside was broken, at least this line right here. And then also we would have confirmation if there would be upside if we were able to get above this line that connects to all-time highs, which this was not the case. We fell and collapsed each time that it retested this level. And now we are below this level, which is very important, especially if we continue to stay below it. The last kind of line of defense here for bulls would be this range of roughly 374 to 380, because this range is a very high premium dark pool accumulation range. We saw a ton of dark pool prints here. So I believe that this kind of range over here can provide some form of a short-term bounce. However, as of now, it looks like the trend is bearish, or starting to show us a lot of bearish emphasis to the downside. Again, as long as we stay below this line here that goes to 2020 lows, there is more bearish emphasis, and only support ranges like this can provide a small bounce or rebound, or at least consolidation before falling lower. So very important that this level is a pivot. And also with that, it looked like the whales also agree with me on that standpoint, because we saw a lot of puts hit the tape throughout this entire past week. And if you notice here, you can see that it says 59% put flow to 41% call flow, which doesn't seem like anything insane just on the surface. But if you actually dissect it and look into it further, the majority of the call flow we saw from this entire past week was actually because of OpEx on Friday. A lot of these here are super deep in the money calls, which are virtually irrelevant, at least for me. Just looking at all of these, you can see here they had the expiration for 12/16, and we tend to see these before OpEx. So all of this, I'd pretty much cancel out of my analysis. I don't pay attention to any of these calls that we're seeing here. The real ones that I'm very interested in, at least the real prints that I'm interested in, all came before that. You can see here on 12/15, all of these major prints like 1.8 million in premium for this 380 strike. They bought this at around 389 for the 12/30 expiration. This one was very profitable end of the week. And a lot of these also, you can see here, pretty far out the money, 393, 370, 390. All these were coming in earlier in the week before we saw that major downward trend. So important to continue watching the flow. A lot of these did predict this downward move that we had. And also end of the week here, you can see a 380 put hit the tape, and this one ended up being profitable as well intraday while we continue to fall. So continue to watch the flow when we see a lot of these bearish bets, kind of like we saw earlier in the week with these big put orders. This ended up being followed by a major down leg in the market for these major 3 days where we had a lot of downside. So if we get some form of a rebound off of this high premium range for dark pools, at least in the short term, I'm going to definitely be looking at the flow here, because this can give us insight on when a potential short setup can emerge. Because as of now, in terms of the trend being downwards, it would be more so sell the bounce, at least the motto going forward because of this. So I'm going to continue to watch this, continue to watch the flow over here. And then also, if we have a retest of this 2020 trend line, this could be a possible short opportunity, just because the retest would show if there is any strength left in terms of bulls, or if it would get rejected off of here because of a lot of sellers from this range. Also important to note is this downward trend line on QQQ, very similar to what we saw in the S&P 500. We actually broke below this as of last week, which is very important, because this signifies potential, or at least future tech weakness, because we did maintain above it for the past 2 weeks or so, but now are back below, which is very similar to what we saw over here in August of 2022. We broke above, but it was unable to stay above very long, which means this was a fake breakout, and then it fell back below, retested it again, and then we saw a major downtrend that formed a new yearly low for 2022. So as of now, we had a very similar fake out that fell below, with a weekly closing below. So this is a potential catalyst for further downside in not only tech, but also the general market, because this will weigh, or at least the holdings of tech will weigh on stuff like the S&P 500, also the Dow, which is another important thing here. We saw a head and shoulders pattern formed. As of now, it's retesting its own downward trend line here, as you can see. So we will see what happens here, but it isn't looking the best for the Dow, as it has a head and shoulders pattern above. A very similar outlook to what we saw for QQQ's own head and shoulders pattern back in August. You can see here the left shoulder, the head over here, and then the right shoulder, and then it fell down lower. So as of now, it's printing a very similar setup here. So we will see and check back on it although it hasn't shown confirmation just yet of falling below. This is something that could potentially fall below in the future, and that could lead to some more market-wide downside. Additionally, Apple is looking pretty bearish. You can see here this weekly close is not good for any bulls out there for Apple. You can see here just based on the weekly closing below, that shows a lot further downside in the future here. And just going over to the hourly chart to give a better glimpse of what's happening here, you can see it rejected off of this resistance tons of times since it started back in October, at least end of October 2022. We've just been rejected constantly from up here, and it happened yet again on December 13th and fell all the way, and now we are below that level. So bulls, your last chance here is this week. If this weekly candle cannot close above this line back into the pennant, then this thing is going to continue to fall into 2023. So definitely watch Apple, because this will weigh on the general market. It is the biggest holding of the market. So very important close that we had here on the weekly candle below here. So is looking bearish as of now, and we are nearing where that low was from 2022. So I'm going to continue to watch Apple because it is looking fairly bearish at the moment. Additionally, we saw an important retest of this yellow line I have here for the VIX. Remember, this is the line that basically decides when things start to get really bad for the market. If we do cross this in the future, like in 2023, which I do expect, then this kind of starts the next major leg, sell-off leg that is for the general market, because this has characteristically done that each time we've tested it throughout 2022. You can see back here, end of March, early April, we had a retest of this yellow line, bounced up, and you can see what happened after that. It was 1,000 points down for the SPX throughout this entire time frame. Additionally, over here, August, we fell a little bit below, but once it gapped up here on specifically August 22nd, we actually fell back above. We retested it over here, and then it continued upwards. We saw over an 800 point decrease in the S&P 500 there, and then now we have retested it and it got rejected. However, in the future, if this does end up breaking to the upside, we'll likely see another down leg similar to what we saw back here. So do note this line. This starts all the way on November 4th, and right now we're smack in the middle of both this blue line and this yellow line. Both of these start on November 4th from back here in 2021. This other one just went to the low of August that we had since it fell below the yellow line. But for the most part, we're right in between both of these. So I'm continuing to watch both this support now, because this acted as support, as you can see here on December 14th, and then also here as a resistance, because if this is broken, like I said, we will see a lot more downside. So I'm monitoring the VIX at the moment. Also, DXY hasn't been showing that much strength or even as much weakness lately. It's just been kind of not doing much, just consolidating in this range. So I'll continue to watch this, but DXY isn't providing as much insight as the VIX is at the moment. The VIX is mainly what I'm watching, while DXY was kind of the thing to watch back when we saw a lot of downside in the market in earlier 2022. As of now, it's kind of stagnant. Yes, we saw weakness as of recently, which promoted at least one of the variables that promoted upside in the market, but for the most part, it's staying within this kind of range right now and is still below this kind of resistance level of 105.35. So unless it gets back above here, I wouldn't think there'd be any extreme strength to the downside, but continue to watch this level if we did have a breakback above, because that could mean some initial downside in the general market. But other than that, though, appreciate you guys watching this video. Will be an exciting end of the year coming up here, especially with what's happening right now in the market, and I will see you guys next time on Wednesday.